Hi everyone, Mike Flores here on behalf of iTradingU. Let's look at the charts for the week that we want to watch. We're going to start with dollar CAD. Dollar CAD broke through the 55-day low on Thursday. You see the ADX is now turning above 20, meaning the trend is getting stronger. We had 3 down days, strong down days. We're below the 50-day moving average, and we closed below the 200-day moving average on Friday. So if you didn't get short market on close on Friday, you can get short market on open today. You put your stop at the high of today's bar or the high of the breakout bar from the 55-day high if you didn't get short on that breakout. So that's dollar CAD. Let's look at Euro Sterling next. Looking at Euro Sterling, we see it's way below its 200-day and 50-day moving averages. We're in a downtrend. We see the ADX has gotten really strong and broken above the 40 line. The trend is consolidating here at the moment. We can see this small little consolidation. But if it breaks lower, I will add to my short position and get shorter and use my stop as the high of the breakout bar. Let's move over to dollar yen. Dollar yen here, you can see I've drawn 2 trend lines. And these represent a symmetrical triangle or pennant, however you want to see the market. But what we have here, it's a consolidation pattern. So you see the market's been consolidating in this range, and it's going to break out one side or the other now. So the way you could play this is buy on the breakout of the high, which is stop at the low of the symmetrical triangle, or sell on a breakout of the low, which is stop at the high of the symmetrical triangle. Now, either way it breaks out, will most likely give confirmation of it being above the 50 and 200-day moving averages or below the 50 and 200-day moving averages, giving us more confidence in the break. This is why I'm bringing this one up. Let's look at the yen, a couple of the yen crosses. We talked before last week about buying either sterling yen or Aussie yen, whichever one broke out. And we see here that during the middle of the week, sterling yen did in fact break out. And we're closing above that line here. We have a doji formation here, which could be a trend reversal pattern or signify the end of a trend, meaning the end of this mini move. But we'll have to wait and see. The ADX has gotten stronger. It's gone up. And we are above the 50-day and 200-day moving averages. So we'll see how this plays out during the week. So we've got long sterling yen during the week. And remember I said whichever one you get long first, you cancel the other order. So Aussie yen never got that high and broke through its 55-day high. So I'm not in that market. I've canceled that order. And that's it. I'm not looking at it at the moment. Moving on to the Aussie dollar, we see the Australian dollar is flirting with its 55-day high. And I think we talked about this last week. So we'll see. I would buy a break of this high, and my stop will be the low of the breakout day. Again, we're above the 50-day and 200-day moving averages. And if we break above the 55-day high, that will probably turn the ADX stronger and get a trend going. So that's what I'm looking at there. Something else to look at in currencies is sterling dollar. Sterling dollar had what was called an inside day on Friday. So the high and the low of Friday's price action was within the high and the low of Thursday's price action. So the way I'll play this is I'll buy on a break of the high with my stop at the low, or I'll sell on the break of the low with my stop at the high. Now, I'd put more weight in a break of the high in terms of my risk management. So I put a bigger size position if it breaks to the top side because we're above the 50-day and 200-day moving averages, and we broke the 55-day high and had a long sideways move. So I risk weighting to an upside break rather than downside break, but I'd still take both trades. And that trade would be a one-day trade for the inside day. Last week we talked about the energy sector a lot, so let's go back and see what's happening there. I'm going to start with Brent Crude. You saw Brent Crude had a really good week. Friday it closed and opened pretty much where it closed pretty much where it opened. The trend still seems to be strong. The ADX is rising really strongly here. We made new highs. And at the moment, what I'm looking at here again is another inside day. So I again buy on a break of this high, my stop at the low, or sell on a break of this low, my stop at the high. Now this is a strong trend higher, so I definitely put more risk weighting to the upside than the downside. So if I put a full size position onto the upside, I'd probably put a half size position to the downside if it broke to the downside. Now there's a couple inside days in heating oil. There's also an inside day, and you could play that the same way. And there's also one in gasoline. Now, which one do you trade? Well, that's up to you. You could trade all three, or you could spread your risk between all three. So let's say you wanted to risk whatever it was, instead of having one position on in each market, you could put a third of position on in each market in order to spread your risk around, because it's all the energy sector. Now, the one thing I will note is that gasoline is in a seasonally bullish period, but at the moment, the strongest market is the the Brent Crude market. So if I had to take just one of these trades, I probably would put this inside day on, and again, put more risk weighting to the upside. Let's look at crude for a moment. So looking at crude, it's also flirting with its 55-day high. We talked about the energy sector last week. Tension in Iraq has resumed, and that story, that landscape is changing every day. So we'll see what happens there. But I would look to buy on a break of this 55-day high with my stop at the low of the breakout day. Looking for a continuation based on anything that happens over in Iraq. All right, let's go over to some of the commodities markets. Let's look at the corn market. Now, corn has had a really big down move. We've seen that. And it's in a seasonal short period until the end of this month. So seasonality is against corn for the rest of this month. Now, looking here, you'll see I have some percentages. What I did was I drew a percentage from the top, this 55-day high, to this 55-day low. And I did that to show you what's happening here in the market. And I'll go over that in 1 second. But notice how the past 3 days we had really strong higher moves up in corn. Sorry, higher closes in corn. The last 2 days have been very strong. So the question is, am I looking to get long here? Well, no, not really. I really wouldn't consider getting long until two things. The seasonality at the end of the month ran out, or the 200-day moving average was broken and closed higher. That's where I would first take my first small position and then really look for it to break and close above the 50-day moving average. That's what I really want to see. Now, what could happen here is, I drew this again to show you the 50% move coincides with this 20-day moving, the 20-day price high, and the 50-day moving average. So what could happen here is we could get a rally up to this level, to this zone, and then resume in a sell-off. That would be a 50% retracement of this move from here to down here. And that's a very common thing that you can see happen in the markets. And we'll watch this unfold in the weeks that come up, or the days that come up. But for now, that's how I'd play this market. I'd buy small on a break of this 200-day moving average, but really would like to see it break above this zone for it to get a continued move stronger. And remember, seasonality is still against us for the rest of this week, but price action always trumps seasonality. All right, let's go over to the sugar market. I don't think we've talked about sugar in a while. So in the sugar market, here as well, we've had two very strong closes higher over the past 2 days. We are now in a seasonally strong period in sugar till the end of July. We've broken and closed above the 50-day moving average, and now we're flirting with the 200-day moving average and the 55-day price action high. So if you're not long sugar already on the break of this 50-day moving average, I would look to get long on a break of the 200-day moving average, and preferably see it break above the 55-day moving average as well. Notice the ADX has turned up. We really want to see this get above 20 to show that the market's really starting to trend. So that's the way I would play this market. On a break of the 200-day and the 55-day, I would look to get long. All right, that's all I have for you guys today. As always, please leave your comments, feedback, and questions in the comment section. I look forward to speaking to you guys soon. You guys have a great week. On behalf of iTradingU, this is Mike Flores. Have a good one.